Thank you for watching my YouTube channel. My name is Yulianti. Currently, I am graduate student from IPMI Business School, Jakarta, Indonesia. I would like to share my class learning from my facilitator, Professor Roy Sembel. There are 3 keys that I learned in session 1 from class Professor Roy Sembel. The first is corporate and financial market. Second, principle of good corporate governance. The third is 4 cornerstones of corporate finance. The first one is corporate and financial market. How do corporations interact with the financial market? Corporations raise the money in the security market by selling either debt or equity. Financial market is provided an avenue for sale and purchase of the assets such as a bond, stock, share, a foreign exchange, and other derivatives. With the company cash flow, they can reinvesting their money for the asset. With the company cash flow, the company can also pay the government tax, pay dividend to shareholders. Second is principle of good corporate governance. By implementing the principle of good corporate governance, company will not fail to comply with the regulation and quality standard normally apply to liability company. There are 5 principles of good corporate governance. The first one is transparency, accountability, responsibility, independency, and fairness. The impact company implement the principle of good corporate governance are prudent management according to mandate given, sustainable performance improvement, and company also have better corporate image and also value creation. The third is the 4 cornerstone of the corporate finance value by McKinsey and company consultant. The first value is the core value. Company create value by investing capital to generate future cash flow at a higher rate of return than the cost of capital. Combination of the growth company, return of the invested capital, and healthy cash flow drive value creation. At the end, the growth company, return of the invested capital should generate healthy cash flow. The second of the value is the conservation of the value. Company create value by generating higher the cash flow. Activity in the company without changing the growth, return of the invested capital, and the cash flow will not create the value. The third of value is expectation treadmill principle. The more investor expect of your share price, the better you must perform to keep up. And also we must carefully manage both external expectation and internal fundamental to maintain the healthy balance. The last one of the value of the 4 cornerstones of the corporate finance is the best owner of the principle. Value of the business depends who is managing it and strategy to pursue. By applying this principle, executive can figure out the value creating answer to the most corporate finance question, such as which is business strategy to pursue, whether to undertake a proposed acquisition, or whether to repurchase the share. These 3 things that I learned from class Professor Roy Sembel. I hope you can also learn something from this video. Thank you for watching my YouTube video. Please don't forget to subscribe and like my video. See you good people. Please stay healthy, stay happy, stay safe. Bye bye. Thank you.